What I want to do in this video is just going to be just a really quick introduction to exactly how I trade every morning. So I want to talk a little bit about Einstein. You've heard me mention Einstein. And then I also want to talk about the patterns that I use, but I want to go into a little bit more, give you a little bit more information on why I think really Einstein and these patterns, for me, at least for me, I think it's a better way of trading. Not only is it simplifies the process, but I've been trading Einstein now for 30 years, and it continues to perform just as well today as it did 30 years ago. And these patterns I've been using for 35 years, and so I want to talk a little bit more about that. So the combination of both Einstein and the patterns is one of the most powerful approaches that I've seen being used. And the other nice thing about it is I'm the only one that's teaching this. Now, has anybody else discovered these? Maybe, maybe not. I don't know. I've never seen them in a book. I've never seen them in a video before. I'm the only one that has been using this for 35 years now, 30 years with Einstein. And so it has a really solid track record. So I would rather, for me, trade something that has a proven track record than something that has a lot of subjectivity to it. Because the nice thing about using Einstein and using patterns is it's non-subjective. I mean, it gives you very clear entries, and then when it comes to Einstein, it gives you very clear levels, profit targets, and the percentage of accuracy is going to be anywhere between 70 up to 80%. So the probabilities are there as well. But let's get into a little bit more about Einstein. What is the Einstein formula? Now, I didn't actually discover Einstein. Einstein was shared with me by a very successful trader back in the late 80s. And so let's go through it a little bit, and then we can get more into details. But anyway, the Einstein formula, basically, it's a mathematical concept developed by a very successful private day trader during the 1990s to aid in predicting the future direction of stocks, commodities, or currencies with a high level of accuracy. He traded a lot of treasury bonds, and he traded a lot of the S&P 500. This was back in the 80s. All right. But the formula works across the board no matter what you're using. This trader discovered that the movement of market price action had similarities with that of a car moving along a road, whereby knowing the starting distance, road conditions, and the speed of the car, you can predict its future direction, and also the minimum, and this is important, the minimum travel distance, even if the driver applied the brakes suddenly. So just like a car, right? Cars going down the street, mathematically, there are formulas out there that you can calculate the stopping distance of a car based on its speed and taking into account other factors. You can calculate the stopping distance of a car. But there are always going to be the unknown, right? The conditions of the road and so forth, right? That would change it. But on average, right? On average, you're going to be pretty accurate in being able to predict that. And that's basically what Einstein is doing. And that's why Einstein has a success rate of hitting its target between 70 and 80% of the time. The other 30% is because of unknown conditions, right? Just like the road. Maybe there's ice on the road, black ice. Maybe it's been raining, right? Maybe the tires on the car. Maybe the tread's down, right? But we're talking about on average, and that's the important thing here. Remember, nothing's 100%. And you don't want anything that's 100%, because if you did, it'd stop working anyway. So, you have to stop thinking in terms of looking for that perfect system. It doesn't exist. All we have is tools out there that can put the probabilities in our favor. If that's what this is, it's a tool, two tools that puts the probabilities in my favor. And we're pretty much at the upper limit of what we can expect. If you look at any successful trader, most traders are only they're only hitting between somewhere in the 60s to 70s. You can't consistently do beyond that. It's just impossible, because there's the unknown factor in the market, and it's what I call it market noise. You can't predict noise. All right. So anybody that thinks that they can consistently be 80% accurate, they can't. They just can't. Okay, I've never seen it done. My best day ever was I was only 47% accurate that day, and I've talked about this before in other videos. And so forget about percentages. Definitely puts the odds in our favor, but there's other factors involved in trading, and obviously the biggest is us as individuals, right? Most people, after they have a loss or so, they give up. And, 2 losses and they're ready to throw in the towel. Even if it was 98% accurate, 2 losses in a row, they throw in the towel. So, forget about percentages. The key to trading is use your tools, but at the same time, tools can put the odds in your favor. It still gets down to you as an individual to understand the market and work with those tools over and over again, just like a carpenter does. You're not going to go out and build a house not knowing how to build a house, but you put a good tool in the hands of a carpenter that has a lot of experience, they're going to build a beautiful house. It's the same thing with trading, okay? These are tools, folks. But these are the best tools that I've found, and not only have I found them to be reliable, but they work across the board, and I'm going to talk a little bit more about that. So let's move on here. So anyway, similar to a car, the stopping distance, right, in this case for us would be a price target of market price movements is influenced by the direction and speed velocity of price changes at any given point in time. However, the formula had one limitation. It did not factor in the present market conditions that could impact how far prices would travel. Okay, and so that's where my patterns come in. So he did a very good job, right, of predicting the direction and the distance that something would travel. But what he didn't take into account was the fact that there are other conditions, and that's where these patterns come in. The missing conditions encompass the behavioral inclinations of market participants during the period when prices were fluctuating. I can identify these inclinations with the use of what I call behavioral patterns. Just call them BP for short. So by utilizing the behavioral patterns, I can better discern these inclinations which pertain to the behavioral tendencies of market participants during the time of price fluctuations. Okay, so let me talk a little bit more about patterns, because this is really important to understand this and why these are so strong. Okay, I used a process, okay, called predictive modeling, okay? The process I used to find the behavioral patterns. I'm going to tell you a little bit more about how I did that. But what is predictive modeling? Predictive modeling is also known as predictive analytics. It aims to forecast future events or outcomes by analyzing past repeatable patterns. I call them behavioral patterns, all right? Those behavioral patterns, and I've put this in other videos before, so if you're interested in those other videos, go to my YouTube channel, Innovative Trading Strategies, and you'll see that I talk a little bit more about behavioral patterns and what they are and how they can be, and how people's behavior can be predictable under certain conditions. These behavioral patterns that can predict future results. Its objective is to address the question, given a specific price patterns, in this case patterns, could be a price patterns, which could be a series of different prices and how those bars are set up. We'll talk about that. What is the most probable outcome in the future? The patterns that show the highest predictability within a broad range of financial instruments I call them behavioral patterns. Okay? For me, a behavioral pattern, if it only works in one market, okay, so if I'm using it, say, with an index or US 500 or whatever the case may be, right? Maybe you're commodity trading. You like to trade pork bellies, right? Or you like to trade stocks, all right? I don't want to see it work in one thing. I want it to see it work across the board. When I find that, I call it a behavioral pattern. And I only have maybe 7 that I have found that have continually held up. Okay, and I'll tell you how I found those. So the patterns that show the highest probability within a broad range of financial instruments I have called behavioral patterns. These specific patterns are an expected emotional response from a large group of people to a specific market event and or events. So what are the advantages of behavioral patterns? Well, there's a lot of advantages to patterns over using what I call indicators. Now, I know a lot of people like to use indicators. I'm not going to bash indicators. I've just never found an indicator that you can use by yourself, to get very specific entries and exits, right? They're a little subjective, and a lot of people like to throw indicators on top of indicators. But the nice thing about behavioral patterns is there is no lag time. Okay, so you don't have to wait like an indicator, right? Which is lagging, right? It lags price. Patterns do not lag price. Very important, particularly when it comes to us short-term traders. Works in all markets and conditions. It's non-subjective. So in other words, it either is a buy or it's not a buy, either a sell or it's not a sell. So there's no guesswork. Takes a lot of the stress of trading out of the equation. The key to being successful is you want to reduce as much stress as possible. Okay, we've all been there, right? You get real stressed out and then you can't think straight, right? It happens to everybody. So we need to eliminate a lot of that stress. And one way to do that is having very clear entries and exits and targets. That eliminates a lot of the stress, all right? And also can be quantified, measured with historical testing. So it's easy to go back and test it, right? It's easy to go back and say, is this particular pattern, is it what we say it is? Is it going to perform like it performs, say, if I'm using it with the S&P 500 or the E-mini? Is this same pattern that's done very well going to perform in other markets? That's what we need to find, all right? And it's a very tedious process, all right? So this is kind of an idea of what I'm looking at when I'm looking at patterns. I'm looking at the relationship. I look at 2 bars, 3 bars, 4 bars. I think even went back to 5 bars. And so what we did, and this was back in the 80s, is we programmed every single day after the market closed on the S&P 500. What we do is we'd go back 2 days, 3 days, 4 days, 5 days, and we'd look at this relationship. We looked at the relationship of the highs, how they opened, how they closed, and the lows. And we ran combination of all these different, okay? So in the case of something like this, we'd say, okay, if you go back, let's say today it closed at the end of the day. Here we are at the end of the day. We'd run our study and go back 2 bars. And so we look at the relationship, say, oh, wow. Okay, so we took out the prior day's low, that's the low right there. Today took out the prior day's high, right? It opened up slightly higher. In this case, you can see it opened up slightly higher because that's your close right there. That's your open. And it closed higher, right? But it didn't take out the high. It didn't take down the high yesterday. So we look at that total relationship, right? And then we look at it and we say, okay, so let's go back and let's see if that has any predictability to it. If it wasn't only 70% and higher, we wouldn't go any further. All right. So it had to show probabilities of 70%. Then we look at the relationship of 3 days, 4 days, and then 5 days back. And then every once in a while we're going to hit. And like I said, it's a very tedious, took years to go through these and find them because, there's thousands of different combinations of prices, right? So let's say that we find one in the S&P 500 has a 70 to 75% probability of being able to predict, once again, predict what the next bar is going to do, the next bar. So if I'm looking at a 5-minute or I'm looking at a daily, how predictable is that? Can it predict for me with high probabilities of what the next bar is going to do? Is it going to go up or is it going to go down? And so then what we do is once we found something like that in the S&P 500, then we just took that pattern and then we ran it across other markets. We ran it across currencies, ran it across treasury bonds. We ran it across different commodities, everything, pork bellies, cattle, gold, silver, you name it. We'd run it across these different markets because we had a lot of data. And we would see, did it hold up or did it not? If it held up and it was profitable across the board, not just in one, but it had to be profitable in all of the different markets, then we would tag it as a reliable pattern. It had predictability. Okay, and like I said, we don't have many of them. We only have, what did I say, about 7, I think. Maybe a little bit more than that, maybe 8 or 9. But anyway, we don't have many of them because there's not a lot there. Now, maybe there may be more. But I think it depends on, how you look at it. Maybe, I'm just thinking on the top of my head. I mean, we didn't look at trends or anything else to factor into. We were basically just looking at these patterns. All right, over and over and over again, every day for several years. And we found patterns that we really like, found them repeatable. And that's what these behavioral patterns are. Okay, so using Einstein, so let's get into Einstein plus the behavioral patterns. Okay, so basically what Einstein does, once again, is Einstein, first of all, we wait for a specific pattern to develop. Now, let me go back with Einstein. The beautiful thing about Einstein is just like with a car going down the road, right? And let's say the car has a stopping distance of 5 feet, okay? We can backward that formula and say, okay, in order for me to predict a skid, let's say a skid distance of 5 feet, all right? Then even if he slams on the brake, he has to be going X speed, right? He has to be up to a certain speed, okay, in order for me to get those 5 feet. So let's say that I'm a stock trader and I'm going for a 10-cent move. Okay, that's going to be one result from the formula. If I'm looking for, maybe I'm looking for a dollar move, right? Then what I'll do is I'll run the formula until it comes up with a dollar move. So I look for first the pattern. We look for the pattern to set up. And then what I do is we go to Einstein, and Einstein says, yes, you're going to get a 20-cent move, or you're going to get a dollar move, or whatever the case may be. All right. When it does that, okay, Einstein also says that if for some reason it reverses, okay, and remember, 70% of the time you're going to hit it between, really, our studies have shown across the board 72 to 80%. Okay, that's the success of hitting target. Now that's hitting target before reversal. So we do have a reversal point or stop point at which we look at, but it has that very high probability that it's going to continue to go in that direction, right? With a very high probability, but at the same time, once again, not always, and sometimes it does reverse, but the probabilities are very high. I'm going to hit my target before reversal. So when I talk about probabilities, we're talking about a probability before reversal. All right. So whether Einstein predicts a dollar move, or it predicts a 10-cent move, or a 50-cent move, it's still going to have the same probabilities of hitting the target before reversals. So basically, we wait for the pattern. One of our patterns is set up, and then once that sets up, then we go to Einstein and say, okay, I have a buy pattern. If I buy it, what can I expect to see? Okay, where can I expect to see with the highest probability? In this case, anything over 70%. And Einstein will give me those numbers. So here's a real-time example. Now, this is Tesla, and this is a 5-minute chart. And this is something that we did call out in the room. And we had an entry price down here. If you look at our entry price, it was 828.80. Okay. When this pattern set up, it said that you have a high probability of going up to 833.80. That was a $5 move. All right, $5 move. And you can see it hit that $5. It hit that $5 move. Okay, so what Einstein is telling us is not only is it giving us an entry, but I'll see a lot of people, they don't know where to get out. A lot of day traders, particularly stock traders that like to trade, if you're a buyer of stocks, you like to trade the breakouts, or people look at support and resistance and all those things. But the nice thing about Einstein, it gives me a high probability of where I need to get out. Okay, now a lot of times what Einstein will do is, let's say that it's on my way to target. Einstein may calculate and say, you know what? It's not going 10. It's probably going to go, maybe not $5 in this case. Maybe it's going to go up $7, $8, $9. Okay. And so when I see that, I'm more inclined to wait to see how prices are acting to see if I'm going to get those higher prices, because they still all have the same probability of hitting. Okay, makes sense? So when we're talking about trading stocks, or trading anything for that matter, whether it be indices or whatever, this is really powerful. And not only is it powerful, it simplifies the process, right? You'll see a bunch of lines, you'll see a bunch of indicators on my charts. You don't see all that stuff because I don't need it. I only need my patterns. And I watch for very specific patterns which set up. And once the setup is there, then I look to Einstein. Einstein will give me an idea how far it's going to move. All right, so let's look at some other things here. This is an example of the E-mini. And once again, 5 minutes, going for a 12.5 point projection. Market opened up, had a pattern back over here. It said to enter. As soon as the entry point for the pattern, it predicted that it was going to go from 39.8450 down to 39.72. That was our target. And sure enough, once we got in, it didn't take long. Maybe, what's this? These are 5 minute charts, so 5, 10, 15 minutes later to hit our target. All right. So we're not really concerned about the time factor. We know it's going to hit our target. Tighter the windows, the faster the target. The bigger the windows, like if I wanted to go for maybe I wanted to go instead of 12.5, maybe I wanted to go for a 25 point, right? Or maybe I want to go for a 50 point. It could take long. Could hit it right away. It could take a little bit longer. It will hit it. It's just a time factor. How long do you want to be in the market? All right. It's up to you. The other thing is, like, let's say you're trading a stock. I mean, you're not going to trade a dollar stock and try to go for dollar targets. It doesn't make sense. I mean, because if you have a stock that the ATR, which is the average true range, has only been running $1, I mean, you don't want to be looking for dollar targets because you probably won't even hit it that day, right? So you want to go for smaller targets. So bigger stocks like Tesla, yeah, $5. Smaller stocks, if you're looking at stocks of, anywhere between $2 and $10, you're looking at targets of, 10, 20, 30 cents. Okay, sometimes more. But that's kind of a ballpark of what you can expect to hit on those kind of markets, right? All right, now I think I've got one more here. So this is gold. This is a $4. Do a lot of gold. Once again, I demonstrate this every morning in the chat room, guys. I do this every single morning. It's open to everybody. I do it for an hour, and then after that, I move over to our live room. So you can watch this yourself, all right? So you can look at the performance of how well Einstein and these patterns work. So join us in the morning. Every morning, Monday through Friday. I'm there from 9 to 10 Eastern time. So you can watch us trade not only these indices. I do trade gold, trade natural gas. I trade the indices, E-mini S&P. I trade the mini Russell. We trade all kinds of things, and we also look at stocks. All right. So please join us so you can see how well this stuff works. So anyway, once again, I'm here every morning, so please join me for my live show. Do it every morning. Been doing this for a while. A lot of archives out there. You can go back and you can look at them. You can go back and look at my calls during the day because I call them out in the morning. I'm buying here, I'm exiting here. It's very clear cut. There's no guesswork. There's no, hey, I would have bought that, or hey, I would have sold that. I'm giving you my entries and exits exactly when they're being executed. Okay, so that's something to keep in mind. But one thing is when we're going through YouTube, there's a delay there, right? So there's about, I think I figured like a 10-second, 15-minute delay, 15-second delay. I can't control that. So do not try to trade these, all right? Now, when I'm in my live room, I'm doing it through Zoom. Zoom is live. It's for subscribers. But on YouTube, there is going to be that delay. So please don't try to be trading any of these setups that you see because you're going to be behind the 8 ball, right? I mean, there's a delay. And when it comes to trading, particularly if you're short term, like I am, that can be all the difference in the world between making money on the trade or losing money on the trade. Sometimes you do good, but a lot of times you're gonna miss it. So don't. And also, I have to say that I am an educator. I am not a financial advisor. I do not take anybody's money. I don't trade for anybody. I don't tell you what to trade. I mean, I tell you what I trade. You trade whatever you want to trade, but you're responsible for your own trading. I am not responsible for your trading. All I can do is show you what I've used over the last 40 years of my trading career, what works for me, the tools that I've developed, my own personal tools, and how I use them. It's still up to you. Plus, you definitely don't want to ever trade money you can't afford to lose. So no, you're not going to come in with $1,000 and make $100,000 a year. I mean, you got to be realistic. All right. Other people may promise you that, but it's a lie. Okay, I'm going to I shoot straight with all my customers. Everybody in the chat room, I tell you the same thing. All right, got to be realistic in what you can expect to make, but you're not going to be an expert trader overnight. But I can give you some tools to make the process easier. All right, and I can give you tools that have worked for me over the last 35 years. And these are really, really strong tools. And no, they are not publicly available. I'm the only one who has, I have students that I have taught these patterns to. I've got just a few that I have also taught Einstein to. Einstein will not always be available. All right. So that's just something to keep in mind, because Einstein is extremely, extremely powerful. All right. So that being said, please join me. You can watch me trade in the morning. Also, if you go to my website, innovativetradingstrategies.com. Okay, I do offer 3 different levels. I have a silver, a gold, and a platinum. Right now, only the platinum teaches Einstein. Once again, platinum will eventually be going away. That's the only one where I teach Einstein. Gold, I'm going to teach you some of the patterns. I use 4 different patterns with Einstein. That's only taught in gold. And then the other patterns can be learned in silver. All right. So as you move up, obviously the strategies, we add to these strategies. I teach crystal ball here, and that's a whole nother animal. I use crystal ball. I teach crystal ball under the gold membership. If you're interested in crystal ball, take a look at my videos. I demonstrate crystal ball being traded live. I don't do crystal ball in the morning, but I do use Einstein with the patterns in the morning live with the stocks and the indices. So you'll be able to watch that there. But if you go to this page here under trading education, you'll see that what we have here, if I can move this down, it goes into everything that is included. So if you're the type of person that would like to understand on how I do this and you want to do it yourself and become an independent trader, that's the best way to do it. I do not recommend that you just follow somebody blindly, really for 2 reasons. Number one, you're not going to learn anything. And 2, at some point, whether it be myself or whoever, they may decide to stop teaching their method, right? And then you have absolutely nothing. So I highly don't recommend that you do that. All right, it's just, but then again, if you do like that, you definitely don't have to. You don't have to do it that way. You can just join in on the room. You can watch the trades and go from there. So it's certainly up to you how you want to do that. All right, so that's gonna wrap it up. Once again, if you do have any questions, feel free to contact me. Contact me at contact@innovativetradingstrategies.com. Be glad to answer your questions. Or you can go to my website, innovativetradingstrategies.com, or my YouTube channel, Innovative Trading Strategies. Plenty of videos out there. I've been doing videos since 2019, so tons and tons of videos out there. There's really good, helpful information. I think you would enjoy that. If you're a short-term trader, even if you're an overnight trader, these patterns do work on the daily charts. I'm not much of a overnight trader because I think opportunity is there during the day. And I like to have multiple opportunities during the day instead of just taking one shot at it, right? If you're a day trader or you're a position trader, you have to wait 2 or 3 days before you see the results. Gosh, when you're a short-term trader or day trader, you can have 20, 30 opportunities a day in order to either hit a target or see your results. So I do, and I have always been a short-term trader. And besides, you don't have that overnight risk. So anyhow, that's going to wrap it. Please, if you like these videos, help me out. Please subscribe to my channel. That helps me out. Also, give me a thumbs up. And make sure you hit that notification bell so if I have any new videos that comes out, you'll be the first to be notified. Once again, join me in the morning, and feel free to have a moderator there. Feel free to ask us if you have anything that you would like us to look at in the morning. And if I get a minute, I'd be glad to look at whatever it is. It could be a forex. It could be maybe a commodity. Maybe you're a commodity trader. Maybe it's a particular stock that you like. We'll be glad to look at that for you. All right. Everybody have a great day, and we'll see you hopefully first thing in the morning for our next live morning show.